Hi, I'm ReAnn Gonzalez with Edge Home Finance here in El Paso. One of the biggest misunderstandings I see with home buyers is thinking that once they get pre-approved, they are fully cleared and there is nothing else to worry about. A pre-approval is a very important first step, but it is not the finish line. There are still a few things that can happen between pre-approval and closing that can cause delays, create new conditions, or even stop a loan from being approved altogether. Okay, so now let's get into it. Some of the biggest mistakes buyers need to avoid once they are under contract and moving towards closing. The first one is changing jobs. Now, that does not always mean the loan is dead, but it can absolutely change the approval. If you quit your job, switch from salary to commission, move into self-employment, or even change industries, that can create a problem depending on the loan program and timing. Before making any employment changes during a home purchase, talk to your lender first. It is always better to ask before making a move than to find out later that it affects your approval. The second mistake is buying a car, furniture, appliances, or opening new credit before closing. This one happens more often than you would think. A buyer gets excited, they start planning for the new house, and they go finance a new living room set, a washer and dryer, or even a vehicle. The problem is that new debt changes your debt to income ratio, and it can also lower your credit score. That can take a loan from approved to declined very quickly. Even if the monthly payment seems small, it can still affect the numbers. So the safest rule is this: do not open, charge, or finance anything new until your loan has closed and funded. The third mistake is making late payments during the mortgage process. Some buyers think once they are pre-approved, their credit is already done, being reviewed. That is not true. Lenders may check credit again before closing, and if new late payments show up, that can raise red flags. So keep making every payment on time. Credit cards, car loans, student loans, anything reporting to your credit. The fourth issue is moving money around without a paper trail. This is a big one. If large deposits suddenly show up in your bank account and we cannot clearly document where that money came from, it can be a big problem. That means if a family member is helping you, if you are moving money from one account to another, or if you are depositing cash, you need to make sure everything can be documented properly. The mortgage process is all about sourcing and paper trail. So before moving large sums of money, call your lender and ask how to handle it the right way. And the fifth mistake is letting your bank balances drop too low. Sometimes buyers qualify with just enough funds for down payment, closing costs, and reserves. Then life happens. They spend money, move money, or forget that they still need those funds verified before closing. If your balances drop below what is needed to close, that can absolutely create an issue. So during the process, be careful with your savings, avoid large unnecessary purchases, and keep your funds stable, unless you have talked with your lender first. The bottom line is this: getting pre-approved is a great start, but you still need to protect that approval all the way to the closing table. This is exactly why I stay in close contact with my buyers during the process. My job is not just to get you pre-approved, my job is to get you all the way through closing without surprises. If you're planning to buy a home this year, talk to me before you make any big financial moves. A quick conversation now can save you a lot of stress later. I'm ReAnn Gonzalez with Edge Home Finance. I am always happy to help.